Welcome everybody to a new video of Tradomics. My name is Dario and this episode is focused on 8 Swiss stocks. So compared to the last analysis that we issued, we added a new company which is ABB and we will be analyzing it at the end of this video. As usual, if you want to follow our analysis and get notified as soon as possible, I recommend you to subscribe to the channel. And if you want to have more insights regarding our methodology, I suggest you to have a look at the introduction to the T cycle analysis video. So let's get it started. And as usual, we start with Roche. So as for the last video, we were saying that we could have had at the end of this weekly downward cycle a bounce back to the upside. Unfortunately, this bounce was not so strong, and if we zoom in, we see that we have had the closing of this T weekly, weekly downward cycle. So this is the T1, which is which can have duration between 6 to 11 days, and in this case was 8 days, so 8 bars. So with this candle that was made on the 11th of November, we have had a new weekly cycle, okay? But this weekly cycle counted just 1 and 2 bars. So 2 bars are enough to give born to a weekly cycle, because a weekly cycle needs a T minus 2 duration, which is basically a duration encompassed between 2 and 3 days um, in terms of number of candles over the minimum, which in this case was signed at 282.6 Swiss francs. So we have had this candle plus this candle, but then we um, went lower to this low, so the low at 282, and therefore we started to go down until this candle here, 21st of November, after 7 days. Okay, so we completed another weekly downward cycle, and now from this low we are seeing slow recovery. Now, what can we say about this setup? So this setup has counted the first T plus 1, then we have had first weekly downward cycle, second weekly downward cycle, and here you see that we have spent 1, 2, 3, slightly 4 days to have this cycle here. And this cycle can be interpreted as a T plus 1, because this has been a first weekly downward cycle negative one and second weekly downward cycle. Together, this is a T plus 1. So we have all the condition to say this is a T plus 1 of 15 days. So now we can update the chart. So let's clean it up first. And we can add then the labels to have it updated. Now, if we count then the total duration from this T plus 3 until here, we have 50 days. Okay, so 50 days is already a minimum duration to have this T plus 3 downward cycle closed. But of course, we can even extend the duration of this T plus 3, okay? So the minimum duration is there. So this is completed and we can have another cycle. Another cycle which is a T plus 2, a T plus 3, a T plus 4, whatever. But if this path is linked to this one, so to this T plus 3, then we will return back to the absolute low that was made on the 21st of November, because this T plus 3 is negative. So therefore, the level of the price can fall until a duration which is at most 89 days. So here you have to be really aware that we can continue to fall down until at most, so that would be the worst case scenario, until 89 days, which is Monday, 20 January 2025. Okay. So that's the first consideration that we have to make. Now we update here the t plus 1 as for the explanation given before. And I can already anticipate here that we have a new cycle that is wider than a t plus 1 for sure. Here we might have a t plus 2 or a t plus 3. Okay. Here we put a question mark. Why it is a t plus 2, t plus 3? Because already the duration, so the number of candles that are higher compared to this low are already sufficient to have a t plus 2 for sure, and we will need another candle to have a t plus 3. So if on Monday we don't open the market below this low, then we will have the minimum duration for a t plus 3. Okay, and in this case we could have first t plus 1, second t plus 1, third t plus 1. Now what can we say, or what are the considerations to in the next weeks to understand whether we will have more possibilities to bounce back to the upside? Well, we have to consider the swings, and we have also, as usual, to gauge the upward cycles. Okay, so in this case, the upward cycle here, and upward means a cycle that starts from a top and end on another top. Here it's 20 bars. Okay, now if we extend then the counter bar, here we have 29 days. So 29 days, it's already enough to close a t plus 2. Okay, so from this top here, we are about to close a t plus 2. Now 29 days, it's a little bit more than a minimum duration, and in general, or let's say from a math calculation, the median duration is between 31 to 33 days. So we have room next week to proceed to the upside eventually if they want to prolong this duration until a median duration. But we have also to consider subcycles. So the subcycle here we have a weekly upward cycle, and with Friday's candle we have had 9 days. So in order to proceed to the upside, here we have not so much time to do it. Okay, so we can proceed to the upside eventually until a maximum duration of 12 days, which means by Tuesday. It means that after Tuesday, we will see a retracement or a pullback. And Tuesday is already maximum duration. We can start already seeing it on Monday. So an opening, for example, in this area, and then a pullback. Okay. In order to understand whether this is a t plus 2 or t plus 3, if the pullback will be not so strong, which means that we will not break up this low at 267.4 Swiss franc, then we will have more possibilities to return back to the tops. But if we start already going back down to this low, well, this it's something that we have to monitor, and eventually if we will start already going further back down here, we will have to assume that this cycle will be part of this t plus 3, and therefore we will have as said, time to continue the downtrend until January at most. Okay, so a little bit, let's say, not easy, but this is what we have at the moment. On top of it, we have a fight on the moving average 200 period and moving average 21. Now, with this candle, given that the price has closed over the level of price that we had at the moving average 200, moving average 21, this it might be already a little feeble positive sign, but it's not enough. It's definitely not enough. Okay, so Let's see what is going to happen next week. Push to the upside eventually until Tuesday, then retracement, and then we will see if the retracement will not, if it's not so strong, then more room to proceed to the upside and to complete this T+2. Otherwise, we have to monitor this low. Last but not least, here we can confirm the development of a T+3 upward cycle, and the T+3 upward cycle is a 3-month cycle, and as always the duration here is between 48 to 89 days. Okay, now let's move to the competitor, which is Novartis. So on Novartis, we have pretty similar situation, especially from the downward cycle perspectives, because from here we have had just a weekly downward cycle that after 1, 2, and 3 bars turned into a negative one, and therefore we started falling. In this case, we had a downtrend, short-term downtrend that lasted 8 days. Subsequently, as for here the arrows, we have had this hook to the upside or hook up, and we ended this upward cycle with the contact of the depth cross between the moving average 200 period and the moving average 21 period. This was really designed to cut out the buyers and putting more pressure to the price for the subsequent downtrend. Okay, so here we have at our the closing of the T+2. So I would say analysis is correct. So we have at the move. So we have had not so many days to the upside, but then we gave born to the weekly downward cycle, and then a week after we closed, or at least the HFT closed the cycle T+2 on the top that was made on the 22nd of November. Okay, so here we have our chart updated. So from desktop here, definitely we have a T+5 yearly upward cycle. We can also say that here we have not just a T+2, but eventually a T+3, because the duration is in line with mostly a median duration. Um, and then now we have to be careful, because if from desktop we have a T+3, at the moment we don't have so many bars, but we have already broken up this candle. Here we can fall for additional days compared to just those that we see on the chart. So here we have had a downtrend of 11 days, but we cannot go back to this top and before 13 days at least. But this is not the case, because we have a tendency now to have a downtrend that started actually here, 2nd of September. So therefore, if this is a T+3, then we will need several days to have the development of the cycle. Okay, and given that here we have the beginning of something that is more than a T+1, then the risk here is to proceed to the downtrend for many other days. How many? And this is the question, and I'm gonna give you the answer. But just to give you some insights, there are not so many channels, probably really few, that can tell you how long the price can keep falling. And this is as information that is really helpful, because if you have to manage your position, especially in this case long position, you are definitely aware how many days you can risk, or how many days you have to manage sizes accordingly. Okay, and this is thanks to our durations. So from the downward cycle perspective, from the low that was made on the 6th of August until the low here, we have 75 bars or 75 days. If we extend or stretch the duration until this candle, we have 86 days, but here with Friday's candle, we have 89 days. Now, 89 days, it's the maximum of a 3 month cycle. Given that this candle is, let's say, the closing of this candle was really close to this swing, I'm not, let's say, considering bounce back to the upside immediately, because Monday candles need to have an absolute low and a weekly low, because we have also to consider the weekly candles. So therefore, this move, it's particularly, let's say, not probable. Okay, so the likelihood of this move will be particularly low on Monday. Okay, and if we have also to split our weekly cycles, here we have 5 days, so not possible. Here we have really the possibility to have a weekly cycle here at 11 days, or we might have also this structure here, 8 days. So considering the shape, I would say that this is, and also given the intraday chart that I don't show here, here we have really the possibility to have a weekly downward cycle that has turned into a negative one, and therefore we have potential continuation to the downtrend. Here we have 6 days. Potentially on Monday, we might have a candle that, depending also on the shape of the candle, can update the absolute lows and maybe have a bounce back to the upside from Tuesday onwards. But the thing is that this cycle here is turned into a negative one. And this cycle is definitely a T plus one, but it's also a T plus 2. Now, if this is a T plus 2, then given that we have reached 14 days, a T plus 2 can last 24 days. And 24 days means that we can proceed to the downtrend at least until the 20th of December 2024. So here you really have to be aware of this condition. And you have to be aware that we can proceed to the downtrend until here, Friday, 20 December. And a target in focus will be first this area at 87, this is 87.9 Swiss francs, and subsequently here at 87.36. So 87.36 and 87.91. Okay. And this is what can happen next week. So Monday, I would say we can definitely go lower this low at 89.69. Then we have to see whether we're going to have bounce back to the upside, because we will need, we don't need actually to close this weekly cycle, because the weekly cycle, upward cycle, can be closed also here. So therefore, I would not expect really bounce back neither on Tuesday, because this one is definitely the closing of the weekly cycle here. So unless it's a T hybrid cycle in which we might have a bounce back to the upside by Tuesday, then we have more downtrend to come. Okay, so be really aware of this condition. This downtrend is helping to do what? To close also the yearly T plus 5 downward cycle that has reached now 285 days. So here we have the possibilities to continue to the downtrend up to 336. This will be more than, so beyond the January, February 2025. But the T plus 2 that is negative can be, of course, in line with the total duration of a T plus 5. And the total duration of a T plus 5 is 338, excluding Bayetons. 338 days means that this yearly downward cycle can be completed at most by the 26th of February 2025. Okay, so T plus 2 negative, in line with the total duration of the T plus 5 yearly downward cycle. So I have said a lot on Novartis, a lot of information. You can of course review the video more and more time. And if you're not really, if you don't feel confident about the method, you can always check our video introduction to the T cycle analysis. But on Nestle, I keep repeating as for the latest videos that we have published that we are in a downtrend, and also given that this T plus 5 has turned into a negative one, the thing is that we can proceed to the downtrend even until next year. If we calculate a median duration, we can estimate the end of this downward cycle by March 2025. But here, the possibilities to proceed to the downside is definitely up to 336 days. And that would be the worst case scenario, 338 days. And 338 days means that Nestle can go into a downtrend, let's say a mid-term downtrend pattern until, excluding Beiyatong, as always, until June 2025. And I hope really this is a valuable insight, because I can also put myself in the shoes of an investor. And it's not really a brilliant situation, because here on Nestle, we are definitely in a bear market, and we have lost since the absolute top here that was done on 25th of April 2023. We have lost a market cap of 33.8% at the moment. But we know also that for sure next week we will continue to go down. Why for sure? Because we haven't reached the minimum duration of this T plus 5. The minimum duration of this T plus 5 is 190, but here we have 187 days. So in order to complete, if or let's say if the HFT, high frequency trading machine, they want to stop this downtrend, they can stop it eventually next week if they want to really stop it. Okay, but they have again more and more days in which they can continue to push the price further down. So in the best case scenario, 187 days. Friday's candle was this one, 196. If they want, they can just go lower this low, okay, at 75.16 Swiss francs. And then we will have the sufficient condition to close at T plus 5, because then we will reach more than 195 days. And here we have 190 days as a minimum duration. This would be sufficient. But if they really want to further push the price downwards, then they can do it until a median duration or a maximum duration. So here we can go up to 2025. Regarding the chart segmentation, here we had in the last video a T with a question mark. Of course, this was a T, and this weekly downward cycle was completed after a total duration of 9 days. Okay, let's zoom in a little bit. So 9 days, and here the candle was correct one, so the analysis was correct. We were foreseeing more downtrend, and here we can update the chart. So we put a weekly cycle here, and from this low here we have a new weekly cycle, but we have even more than a weekly cycle, okay, because gauging the total duration from this T plus 2, we have reached 47 days. So this is a T plus 2 hybrid cycle. So in terms of duration, it's between a monthly and a 3-month cycle duration, because here we have 48 days and here we have 44 days. So 47 is a duration which is encompassed between a T+2 and a T+3. So this is a T+2 hybrid. And we have also completed the T+3 86 days. Perfect. So T+3 here, ended here. 86 days out of 89. Okay, standard duration. So now from this low, we can expect something that is more than a weekly cycle. And we have already a total duration above that low of 8 days. So technically speaking, here we have for sure a T+1, but we can also a T+2. This is important because if we have a T+1 of T+2 and next week, if next week we go lower than this swing, we can already further calculate how long, more precisely, we can continue to extend the downtrend, because by having subcycles of different degrees, we can foresee more precisely by when the trend can stop or by when we can have a bounce back to the upside. Okay, by using the Matryoshka effect. So wider cycles within smaller subcycles. Here we have at the closing of a T+2, we can have the closing on desktop, even if we have, let me check also the possibility to have the closing on desktop, even if I don't like it too much. So I would, by experience, stick more to defining this stop that was made on the 2nd of December as potentially the beginning of the T+2. But for a matter of completeness, I also add the question mark, because we have to verify it in the next days. We don't have so many days below the stop, but that is the situation. So I'm expecting for the next week, as I said, more downtrend compared to uptrend. We might have the condition in which will be sufficient to go lower this point and then complete the T+5, even if the T+5 will have just a minimum duration. So therefore, statistically speaking, you have more chances to the downside rather than the upside. Okay. Over time, we will have more possibilities to begin something new and potentially return back to or revert to the trend. On Swiss Life, arrows are self-explanatory. And remember that I draw those arrows in the last video. So the information that the market has given to us was exactly what we were forecasting. Because I told in the last video analysis that the stop could have been the beginning of something in terms of upward cycle that could have been more than a T+2. And actually, I was making you aware that we were almost really stretched to proceed to the upside, because that this T+3 upward cycle was about to run out of time. And actually, we had 84 days. And I was saying that if we had started to proceed to the downtrend, then from this top we could have expected T+3, and actually that was exactly happened. Now here we can update the chart and put the T+3. We were expecting such retracement, and we were also saying that we could have, without that retracement, start to close a T+3 upward cycle, downward cycle. So in this case, actually, we closed the T+3 at 87 days, so 87 bars, and we closed the T+2 downward cycle here at 42 bars. So according mostly to the maximum duration of a T+2, which is 44 days, and a T+3, which is 89 days, so 3 months and 1 month cycle. So from this low here, we can say that a new cycle is about to start, or has just started. We have just 3 bars, so we don't know exactly which kind of cycle this is, even because the bounce back to the upside was not so prominent at the moment. But here, at least, we can start saying that from this low, we have a weekly cycle in development. Okay, so what can we say on top of it? Thanks to this T+2 negative downward cycle, this one, okay, we have the sufficient condition to close what? To close this T+5. The T+5 here in focus as last 269 days. This means that we have still time to eventually prolong the tail with another T+2, for example, or even a T+3, and further proceed to the downside, so that we can extend the duration of this T+5 towards the maximum duration. Because we are 269, and if we want to go towards the maximum duration, which is more than 300 days, then we can proceed to have this shape by end of January. But of course, we can also take the maximum duration, which is 338 days, excluding Bay and Tong. So here we can go up to 14th of March 2025. And based on the retracement that we will see, this top will start having a prominent value, because here we were expecting to have the beginning of something which could have been more than a T+3, because this T+5 here, as I was explaining in the last video, has run definitely out of time for standard T+5. So here we are already in terms of duration up to a T+6. Okay, and from this top here, we have identified a T+3, T+4. At the moment is a T+3, because now we have seen a certain amount of retracement. And then we will need to monitor the next weeks which kind of information the market will give us. Okay, so at the moment we haven't touched the moving average 200 period. Let's see whether in the next week there will be enough buyers to push further back up the price and to arrive in this area at 700 17, 16 Swiss francs, or if there is the case that we will start having a bounce, then up, but then we continue the tail of this T+5, okay, in development. So let's monitor over the next week what is gonna happen. But at the moment, this is a T+3 and this is a T+2 negative side according to the last video analysis. On UBS, we know that the mid trend is positive because this T+5 upward cycle is a positive one, and therefore until the minimum duration of a T+5, which is 190 days, we can expect a further push to the upside and continuation of the rally. So 190 days means that at least we can expect the price of UBS to increment until Friday, 28th of February 2025, at least. Otherwise, we can continue also in Q2 and Q3 2025. Apart this general vision over the midterm, on the short term here, we were flagging this candle as a possible starting of a T+2, T+3, or even a T+4. At the moment, given that we have had 27 bars below this top, here we can definitely say that this is not just a T+2, but a T+3 and eventually a T+4. Okay, if we gauge the total duration at the moment, we have reached 28 bars up to the candles that was signed on on Friday, 6th of December. So here we have a minimum duration to eventually close a T+2, but still we have time to, if they want to proceed up to further up. Specular situation that we have on the downward cycles, here we have 27 days, so we have already the minimum duration even to start from next week, retracement, closing a T+2 and returning back to the upside. Of course, here all the both ways are possible. So next week it's important to monitor what, for those of you that are doing really short-term investment or intraday trading, is to monitor the stop at $29.17, because the breaking of the stop will lead the price to go to the next one, which is this at 29.57 Swiss francs. Considering this as the beginning of eventually a T plus one, we have reached 9 days. So here I can put, let's put a T plus one upward cycle, or TT plus one upward cycle, because it depends whether they will start already a new T plus two upward cycle next week or not. So we have 9 days. So by Tuesday next week, then we will see the retracement. Otherwise, even from Monday, they will start retracing. The let's say the order of magnitude of the pullback will give us additional information whether they will close the T plus two downward cycle next week, or they will proceed further to the upside before closing the downward cycle. Okay, but that is the expectation we have on UBS for next week. On Swisscom, we were saying that at this particular point in time when the analysis was issued, there were two possibilities. The first one was to start eventually a new weekly downward cycle to have a little bit of a push toward the upside, or to further continue to the downtrend, given that this weekly downward cycle was already negative. At the end of the day, we had the prosecution to the downside, and this weekly downward cycle was made of 9 bars of 9 days. We have had then this candle, this doji. That was done on the 13th of November 2024. We floated around this level of price, 514 Swiss francs, for 1, 2, and 3 days, and then we turned the cycle into a negative one again. And since then, we continued to further update the lows until the candle, this swing of the 27th of November, this weekly downward cycle took another 10 days. Okay, so mostly maximum duration of a weekly cycle. So we were also foreseeing this possibility, because we were saying that given this T plus two downward cycle negative, so a wider cycle, we could have continued to further update the lows. And we were subsequently saying that we would have expected a NUC in order to close at T plus two. And we have had the second option, so prosecution of the downtrend and oak towards the upside. Now we can update the chart, and we can make further considerations. So the first one is that if we now gauge the total duration from this T plus two until here, we have 48 days. So this is a T plus two hybrid cycle, first of all, okay? This is the first consideration, because here we have had a strong tendency toward the downside, and therefore we were not really able to close a T plus two and give birth to another T plus one or T plus two. We have just had a weekly downward cycle here, another weekly downward cycle here, okay? So this is a sign that the pressure of the seller was definitely higher compared to the buyers. Another consideration that we can do is that from this low, where the yearly downward cycle started, we have now 202 days. So we have reached already more than a minimum duration, which is 190 days, to close this T plus five. So here we have the sufficient and necessary condition to close at T plus five, but it's not given by fact that from this low we will start to have another T plus five. Okay, so this is the first thing. The second thing is that we have also to be aware that from this low potential we have a T plus 3, but even a T plus 4. This T plus 4 is now negative, or T plus 3 negative. So this one, T plus 3, is a negative one, and we have reached a total duration of more than 80 days. Now, for the future, given that we do predictive analysis, we have to monitor if from this low we're going to have a T plus 2 or T plus 3 that will be still part of this T plus 4. And eventually, this, if it's part of this T plus 4, we can have a shape of this kind, or even worse, a shape of this kind, or whether we stop the downtrend and we start gaining back some trend towards the upside. Okay. In order to understand it better, we can also gauge here the total duration of this T plus 2. So here we have, here we have 37 days. So we don't have really not too much time to proceed to the upside. Eventually, we still have the entire next week. So if they want to proceed, even if this candle was already having some troubles to let's say, to break up the resistance of the moving average 21 period. So we still have eventually another week to gain some altitude here, and at least having another retest with the moving average 200 period. In this case, we have time until the 17th of December. Otherwise, they can already repush back down the price to begin another T plus 1 or a T plus 2 or even something more. No, a T plus 1 or a T plus 2, sorry. And if this is going to happen, then we have to monitor this swing, because this is our checkpoint. The swing is at 502 Swiss francs, okay? So if this will be broken down, then we might have more confirmation that the downtrend is not over yet. Okay, so that's the situation we have on Swisscom. So for the next week, you have really to be aware, if you have this stock in your portfolio and you want to do short-term trading or speculation or intraday trading, that we might have not so much time to gain more of the price that we had on Friday. So 510 Swiss francs, and therefore more downtrend. Okay, so at the moment, so I will not put any arrow here, but because we have to closely monitor next week. The only thing that I can put is a T plus 2 eventually from this top upward cycle that needs to be confirmed, not just over next week, but in the next 2 weeks. Last but not least, here we have as a cherry on the pie, here we have a little bit of a positive divergence, an RSI indicator. But if this is not confirmed with volumes, then more room for the downtrend. Okay, let's move to the next one. On Geberit, we maintain the situation in which the price is stuck between this upper and lower level of this channel. So we continued this pattern even in the last 2 weeks, where we were saying from this T plus 3 upward cycle there was push back down to the downside, and here we had to closely monitor this low, because eventually if this was broken, then we could have had another negative downward cycle. This didn't happen, so now we can update the chart by saying that, or by writing even better, then this is confirmation of this T plus 2, which can be at this point in time more than a T plus 2, given that the total duration from this T plus 3 has reached 58 days. So this can be either a T plus 2 or something more than a T plus 2. Considering that we have gone also over this swing, I would tend even to consider this one as a T plus 3, because according to our rules, this has now given us information that it's a T plus 3. We have duration and we have swings. Then we have had the closing of this first T plus 1 with this candle after 20 bars, and this was signed on 20th of November 2024. So we can put the T plus 1 here. And then we have had a nice push back toward the upside. This push back to the upside was breaking this eye. And here I flagged really the possibility that from this side there was a T plus 2. Now, if we gauge the other duration here, we have 49 days. So this is more than a T plus 2. So this is a T plus 2 that is now turned into a positive cycle, and therefore we can expect more push toward the upside, because we have a condition in which the extension on the price will seek further tops, even if here we have already the minimum duration. Okay, so 24 days is the minimum duration of a T plus 2. So potentially here we have also the closing of this T plus 2, but it's really the minimum duration. If they want to have a median duration, then from this level of price we have to seek further highs. This means that we can still have some room for gains from Monday onwards of 1.1% at least. Okay, so given that now it's positive and we have reached a minimum duration, I would suggest that the tendency for the next weeks will be towards the upside, at least for the completion of this T plus 2. That can be, it's true, after 24 bars, but it can be also at 32 bars, and 32 bars median duration means that we can further proceed to the upside until 16th of December, or even maximum duration. This would be a little bit more seldom, but needs to be mentioned as well, at until 7th of January 2025. It's important that if we proceed to the upside and we break up this swing, then we will have a room for further rally. Okay. At the same point in time here, we can eventually have the closing of this T plus 2 that needs to be confirmed, because we need to gain more altitude here. So at the moment we can put weekly T for the time being. So next week, more let's say more possibilities to proceed to the upside rather than downside. This target is particularly important, 568.4 Swiss francs, and let's see whether this will be, or in the next weeks there will be the right let's say period to break this pattern that is already in place since May 2024. Okay, we move then to the last one, which is our new entry, ABB. So ABB is a Swedish-Swiss multinational electrical engineering corporation. It's based in the headquarters is based in Switzerland, in Zurich, and it has particularly high revenue. In 2023 has made $32.2 billion. So the interesting thing regarding ABB is the following situation. So first of all, since October 2023, we have had pretty nice rally that pushed the price from its absolute low to the absolute high to gain 79.28%. This has happened in roughly a year, because from October 2023 since until July 2024 is even less than a year, plus 80%. And since its absolute top in July 2024, we are basically going even here into a side range situation, in which the price as first was pushed back down to 42, roughly 42 Swiss francs, then recovered, and then here we are basically eating towards the absolute top at 52.44 Swiss francs. So now, in terms of cycles, what can we say about it? The thing is that, first of all, if we look at the downward cycles here, we have the first T+4 hybrid cycle. So this first part of this year that has 186 bars or 186 days. 186 is not minimum duration to close at T+5. So therefore, this cannot be considered as a downward yearly cycle, but it's just a T+4, eventually T+4 hybrid cycle. Okay, so from this low here, we are not seeing a new T+5. So basically, this part of the chart is attached to the first, if we want to call it, part of this chart. Okay, so that's the first thing. The second thing is that from this low, potentially, we have not just a T+3, but a T+4. And the first T+3 can be segmented here with this candle that was done on the 31st of October 2024, more than after more than 60 days. It's 63 days. Okay, so this can be considered T+3. Now we have had a nice also push toward the upside, and this high at its top at 52.26 Swiss francs. This top is at 52.44 Swiss francs. Okay, so basically we would need eventually in the next weeks a little bit more than 20 cents to break this high. And what can happen if we break this high? If you know already a little bit how the methodology works, then you know the answer. But for those of you that are not really familiar with it, is the following. So if we, let's say, apply the technical analysis, we, of course, will figure it out that in this range of prices, which is at 52, can say also here 51, okay, there is a level of resistance, because here the price was pushed back one time, second time, third time, fourth time, and here we are basically in the middle of the resistance area. But if we if we break this high even for 1 cent, we know that the prosecution of the trend will be definitely to the upside. And this is something that, yes, it's good to know. But the key question for us is for how long the price can continue to rally. And if we break this high as the T+5, the answer is that we can continue to rally until the minimum duration of a T+5 or an yearly upward cycle. And the answer is that if eventually in the next days / next weeks we break that high, that top, we can proceed to the upside until Friday, 11th of April 2025. Okay, so this is the first consideration, the first insight that you gain by watching this channel, and particularly watching this analysis, at least over this company. Do we have a plan B? So is this the only interpretation that we can give to the chart? Unfortunately, no, because there is always a plan B. And for quantitative traders, because this is quantitative analysis, you have always to bear in mind that in the majority of the cases, there are more than one plan that we have to take into consideration to manage accordingly our position, whether this is a short-term, aggressive trading, multi-day trading, trading with options, whatever. The second plan is that from this T plus 5, which was the previously yearly upward cycle to here, we have had 264 bars. If we drag here the extension and the counter here, we are at 366. So 366 is definitely more than a standard duration of a T plus 5, but there might be the possibility to have some Bayes tongues. So Bayes tongues are basically extension among cycles that can extend the duration of the cycle itself. So in this case, the Bayes tongue can be encompassed between a T plus 5 that has not ended here, okay, but has ended, for example, here, plus an extension, okay, and a second T plus 5. So now here the duration is a little bit too much, but the Bayes tongues are basically cycles that have a duration of 3 degrees less compared to the cycles in which they are embedded, okay. So the possibilities that we have a Bayes tongue here are not so high, because we have already a duration which is pretty longer compared to the maximum duration, but still we have the possibility. So the only thing that can screw our analysis, or that can screw the first plan, is that we have 329 bars from this top to this top, okay. This is a nearly upward cycle. This is a Bayes tongue, and then ploof, we start a new T plus 5. So if we start to see, given that this is a T plus 2, that let's see how many bars we have. This is a T plus 2 of 37 bars. So if we start to see either next week or in 2 weeks, and in 2 weeks will be something like this, to have a little bit more push to the upside and then harsh retracement, or for the next week, harsh retracement, we will have a plan B situation in which we might have the beginning of a T plus 5 upward cycle by mid of December or by next week. But this retracement needs to be hard. So it needs to go firstly lower this candle, lower this candle, lower this candle, in let's say in a little time, because otherwise, if the push is not so strong, then a T plus 5 cannot have place. So like in this case, we have had a gap down. So here we have already all the conditions to have a T plus 5. That's why the plan B is seldom, but we have to bear in mind that this is the second possibility. Otherwise, if we do not see in 2 weeks at most a situation of this kind, then we can proceed, or Algos will proceed to buy shares, as said, until Q1 2025 or even more. So this is a valuable insight that I think will be appreciated. I don't know whether over the other channel you can see us things of this kind. I invite you always to follow our analysis, because I don't want you to believe that this is the right way or this is the right methodology to predict statistically the trend of a stock. But and actually you don't have to believe it, but you have to verify over time whether this is something that works or not. And that's why I always leave, or let's say in the majority of the cases, especially when it's possible, I leave the the arrows, because the arrows are the most probable way in which a pathway or a cycle can be developed. Okay, so if we will break this eye, we will continue to proceed on the upside. Bear in mind that we are running out of time on this T+2, so I would not exclude from next week to have a retracement that will start at T+2 or eventually something more, because here we have 102 bars. So from this top, we can have a T+4 upward cycle even. First T+4, eventually second T+4. So let's see from next week what we can have. So this is a really important thing to watch. But if we break this top, then we have confirmation that we can proceed to the upside, especially if we don't, if in 2 weeks we don't have a move to the towards the up and then further push to the downside as explained. Okay, so here I leave also the arrow in yellow to flag this possibility. Hope you enjoyed the video. Thanks for watching, and see you to the next episode.